Today I'm going to be giving you guys 5 of 10 tips on becoming a successful real estate investor. But first, make sure you go ahead, subscribe to the YouTube page, Risk Takers, Big Business and Real Estate, where I'm going to be giving you the real deal on what it is to becoming a real estate investor, whether you're acquiring lots, whether you're acquiring residential properties, commercial space, dealing with contractors, contracting up with state governments, providing affordable housing, doing rentals and fix and flips. If you want the information, it's free. Subscribe to the page, get involved in the conversation, share your opinions, ask questions. Number 1, you want to make sure you buy it right. So when thinking about buying it right, what that simply means is whatever you're acquiring, whether it's a residential structure, a lot, a commercial space, depending on whatever your ultimate outcome is, whatever your end game is, you want to make sure that when you're purchasing, you're buying under market value. And so if you get online and you go visit and look at the MLS, you'll see properties that are for sale at a certain dollar amount, or in that particular area, in that zip code, or in that community, property value is at a certain number. So those properties are looked at as being sold in the market at market going value for that particular structure on square footage and number of bedrooms. So depending on what you're looking to do, whether you're looking to rent or you're looking to flip, you want to make sure you buy under market value, because you're going to have upfront costs that's going to cost you to acquire the asset. It's going to cost you any type of remodeling or renovations that's going to be needed in order for you to get the property set for whatever your end game is. And so if I put an example, now, if you're buying a lot because maybe you're in the development phase and you want to build a new property and flip that property, rule of thumb, never buy a lot that's going to be more than 10% of what you're going to, after you're all in on your expense, put that house on the market and flip that house for. So if you're buying, or your goal is to flip a 3-bedroom, 2.5 bath, that's about 1,900 square feet for $300,000, then you want to make sure, if the beginning of the process you had to go with acquiring the lot and you had to build new on that lot, that lot only costs you about $30,000, because after your all-in expense of maybe another 115, you want to make sure, at least what we do is make sure that we can double up on our money. And so with all the things that you're going to have to do, whether it's pulling certain permits, you're going to have to be going through inspections, you're going to have to be hiring in contractors. It's a number of things, miscellaneous costs that's going to take place. You want to make sure that the initial upfront expense is not more than 10% of what your end goal sale price is going to be. Number 2, you want to buy the right type of property. Up front, you ought to know what your expected end game is. As an investor, you can do one or two things. You can be a landlord, which you have rental properties, if that's your goal, to have residual income, or you might want to go ahead and do fix and flips or build and flips. So making sure you buy the right property simply says knowing what you're doing and buying the right landscape to be able to make easy accomplishment and be successful at being a landlord or being a flipping investor. Now, looking at the right type of property, if you're looking at doing some renting, you want to make sure that you're buying properties that have more bedrooms, because the more bedrooms, the more opportunity you have to increase the rent income that you're able to get. So if you find a structure that's a good opportunity and you're looking to use it as a rental property and it doesn't have the number of bedrooms you want, depending on that layout, whether it's a ranch style, traditional American box home, you want to see if that house has maybe a ranch style house and it has 2 bedrooms and it doesn't have that top level, second floor, but it has an unfinished basement. Now you can take that unfinished basement and you can remodel that basement, adding maybe 2 more bedrooms, maybe 3 bedrooms and another 2 baths to make multiple bedrooms that you can have more opportunity to increase rental income for that potential property. If you don't have a basement, same thing, and you can add additional structure or up or maybe out on the property to add additional bedrooms and expand the common areas. Those are good possibilities or good opportunities for you to use as rental income. So always think about when becoming or doing rentals that the more bedrooms, the more opportunity. As well as if you're like me, I'm an investor, I have properties in other states. I buy multifamily properties where I can fix that property up, I can live in one of the units, and I can rent out the other units. So what that looks like for me on a monthly residual is I take all the residual from the tenants, and the tenants residual take care of the landscaping, the utilities, the taxes, overall, and everything on that property. I own the properties free and clear. I don't own any finance or mortgage companies on those properties. So everything I make monthly is profit that goes into my pocket after I pay all the bills. Next thing, if you're looking at doing fix and flips, the same thing. Most importantly, when seeking out the right property that you want to flip or the right lot that you want to build on and flip, you want to find properties that's more in owner-occupied communities. More owner-occupied communities that are accessible to or in good school districts, that has good community parks, that has access to whether you guys have belt lines or transit systems, easy access to the freeway for commute. Those are the types of houses that you're looking for in those particular areas with access to those number of things, as well as making sure that the house that you're looking for is under market value. And after you are all in with your investment to making improvements, that you're still below that market value threshold and you're able to receive maybe about 150% on your investment. That's covering back your initial upfront investment, as well as putting money in your pocket so that you can pay the utilities and have some income, some extra income in your pocket that shows profit on that particular property. Number 3, you have to buy in the right location. You guys heard this and hear this all the time. Location, location, location. Location is very vital no matter what type of business you're opening, what type of business or what type of community you're seeking to open any establishment. That's why you have malls in certain areas. That's why you have dealerships in certain areas, dining in certain areas, close to residential communities to keep the traffic coming. And so when looking at being a real estate investor, whether you're doing fix and flips, whether you're thinking about being a landlord, you want to make sure that you are purchasing or looking at assets in areas that have access to the community. Or you might find some locations where you have individuals who might be looking at buying a property who doesn't want to be directly in the city. Maybe they don't want easy access to convenience stores and gas stations. Maybe they don't want the bus stops up and down their street or heavy traffic flying by. So if you can, and you're looking at location for whatever your outcome is on that particular property, you maybe want to look at, or if you have someone already who's an interested buyer, knowing what type of property that they would want in a specific geographical area. So paying attention to location, knowing where opportunity zones are, knowing what's in the community, being involved in the community so that you can paint a picture of all the resources that are able and capable and accessible to the tenant or to the new home buyer. So make sure that you guys are looking in the right locations depending on what your outcome is for whatever property that you're looking to acquire, whether it's on a flip side or the rental side. Number 4, never buy on emotion. I know a lot of us have situations to where we are in position to be able to acquire, or we get passed down grandmother's home, mom's home, and that's a good opportunity for you to be in the real estate market as far as an investor. Maybe you want to turn that property to a rental. Maybe you're looking at flipping that property. You have an opportunity to become an owner of a home due to situation passed down from your family. But in another case, I say never buy on emotion. Never buy just because you were told it was a good deal. Never buy just because you have a pre-approval and you've been financed and you just have to get something because you're not sure if your credit is going to be good in 6 months. You're not sure if you're going to have your job in 4 months. You're not sure if you're going to be able to make your payments. Never buy on emotion. You want to make sure that you have all buckets in a row. You want to make sure that you have decided and made a decision about what it is that you're looking to achieve and what you're looking to do with purchasing of a property. So you never want to buy just because you got money in your pocket. Well, I came across some money. I had equity in my home, my primary property. I poured out some of that equity. I got money to spend and I'm going to spend it somewhere and I have to spend it now. That's emotion. Make sure that you have thought out the process, looked at what it is that you need to do, what's best for you, and how can you be successful, and most importantly, increase what you're putting out. And so never buy on emotion. Make sure you guys have thought it out. Don't just buy just because you have the money. Don't take over just because it was passed down to you. Make sure you guys have truly thought out the process and made a list of what it is that you can do with that particular asset to help you be successful and give you peace of mind as an investor and growing your portfolio. And number 5, don't be scared to buy. Just do it. True saying that scared money don't make no money. If you don't put up, you'll never get nothing out. If you don't try, you will never know. We all make mistakes. We all have pros and cons. Some of us make mistakes sooner than others. Some of us don't make any big mistakes. But truth is, we all make mistakes. But in time, if you collaborate, if you get involved in groups, if you follow our YouTube page, you will get information to help you minimize your mistakes and become more successful at a sooner rate as a real estate investor. So pull the trigger, go for it. You can't go wrong. No matter how long it takes, it might be slow, but it's sure. Y'all make sure y'all follow us, Risk Takers, Big Business and Real Estate. I'm David. We're going to be giving you the real deal on what it is to become a real estate investor, not just showing you the glitz and glam of what the end game outcome is, but we're going to be walking you through what it is from start to finish, the pros and the cons. So y'all subscribe to the page, get involved in the conversation, share this with somebody, man, and ask any questions, man. We're going to be posting every week. Y'all, thanks for following us. Tune in. Quality View Properties. Let's go.